There's so much to talk about when you look at the world economy, and actually your research focuses really on every part of the world. What do you worry about the most globally right now?
I worry that growth has been subpar everywhere, whether it's in developed markets or emerging markets. So in the US it's been subpar, and then we've seen these fairly dramatic revisions downwards by the ECB in European growth. But even in China, where they're implementing stimulus, we still have growth slowing down quite a bit from where it was last year. It will be over 6%, but just barely.
Okay, what are the chances of a global recession, and would that be triggered by the US or China?
Well, global recession this year, I have very low odds on it. Our recession models are showing anywhere from high 30s, 40%, but not this year. But those risks really begin to rise by late 2020, 2021. And I think that the U.S. recession risk, what we're taking a look at is really corporate earnings, the profit margins, and right now that's looking to be in a decent place. But the policy accommodation has really made a difference from the Fed and more recently from the ECB.
And Joyce, this for me is really interesting because we're also trying to figure out the canary in the coal mine. So if something were to be really ugly or have a sudden downturn, where do you see it first?
Well, the canary in the coal mine often is emerging markets. We saw that last year. You had an emerging market sell-off, and then you had the U.S. equity market sell-off. But the U.S. equity market ends up being the bellwether in many of these cases. And I think that is a function of the earnings growth and the profit margins, the operating margins, which right now look to be in a relatively healthy place. But we have fourth quarter growth in the U.S. coming down all the way to 1.5%. So I think that's when you're going to get more of the debate on what is the risk of a recession in 2020.
So if you see a U.S. in recession, where would you see that first? Is it market moves, or is it in the economy?
I think you see it more in the market moves. And what we see is that in periods of very low growth, the market volatility matters more. It's more amplified because the liquidity conditions in the market have changed so much since the global financial crisis. So I think that amplification shows up in the financial markets first.
How do you look at Brexit? Is Brexit a systemic risk? So no matter what actually the outcome is, how much does it hurt European growth?
Well, I think that Brexit, in the immediate term, nobody's really that focused on what the consequences are, because there is a working assumption that you will get an extension with some conditionality and that this will take some time to play out. So I wouldn't say that there's an immediate market impact, but certainly when you look at things like business spending and investment going forward, that's where you see more of the impact. And when we look at the potential growth outlook, in the UK and elsewhere, we've been taking it down more systematically.
Just when you look at China, what do we misunderstand about China? Are the authorities, do they have a big handle on China and how to manage the slowdown, or is there a worry that they focus too much on debt creation?
I think that China is trying to do this fiscal stimulus in a different way this time. And so they are doing income tax cuts and they're trying to stimulate consumption. The question is, will that work? Will the Chinese save that, or will they spend more? But the room for fiscal space everywhere is quite limited. With what we've done with QE over the past years and the fiscal stimulus, I mean, if you look at China's consolidated fiscal deficit, including the local government financing vehicles, it's north of 10% of GDP. And the debt burden is very high. So the space to do much on the fiscal side is quite limited. So we have, even with the fiscal stimulus, that China's growth will come down to 6.2% from 6.6% last year. The stimulus is just enough to keep growth from slowing further, but it's not enough to really add much of a boost.
Why are economists so bad at predicting recessions, or why have they been so bad in the past? And is it more difficult now if you overlay it with this kind of political and geopolitical uncertainty?
Well, the geopolitical uncertainty everybody had underestimated. The trade tensions really took a toll on business spending and on confidence last year. And I think the surprise this year is that the growth slowdown has been sharper than anyone anticipated. Everybody thought, well, if the trade tensions come off, the growth will come back more quickly. But you've had a combination of the negative feedback loop from the market sell-off and the lack of liquidity, as well as the ongoing geopolitical risk. And you've had that the Fed pivot has made a difference. The Fed pause has made a big difference. And we've seen here some leader follower, the ECB following suit, and emerging market central banks as well following suit. So we are seeing more accommodation in the system.